What is up, everybody? Logan coming at you guys with another video today. And sorry I've been away for a little bit. I actually went to Bristol, Tennessee for the NASCAR night race, and I had a lot of fun. It was a good time. Got a lot of chills when they were doing God Bless the USA and all that with 100 and some thousand people there. So it's really crazy. It really is like the last great Coliseum, and had a good time. But diving into this video here today, as I get back on the YouTube grind a little bit, we're going to go over the last few trades, and 94 out of 95, really good, really high hit rate, how to kind of manage them. Here are the amplified trades for the year. This is if you're doing 2,000 in collateral, you would be up $4,664 per two contracts on the year, right? So per contract, just divide that by two, around 2,300. And that's through like the ups and downs of the year, which is cool. But you can see all the strikes, the expirations. Here's the reference quantity as well, right? Two contracts per time. Like I said, you can fill these based on how much of your account you prefer to risk as well. If you are someone who wants to follow the trades, the link is below in the description. So it looks like we have some resistance at 44.65 on SPX this week, and then 44.25 and 44.50 seem to be those supports, which is why we see such big dog fighting around this area of just back and forth price action, right? Like we've basically been stuck in this very small range. It looks like we're trying to head back up to 44.65. I'm slightly bullish into this week just because the rate hike is priced in and the rate decision. There's like a 99% chance we don't move at all with that. Should be pretty standard, pretty basic, unless Jerome Powell throws something at us. So overall, like where the market is. So if we come back here, right, gap up or gap down today, we didn't do either. We were actually basically flat from where we closed and haven't moved up or down. Really has been more neutral than anything. So I went ahead and I put on a PCS in Logan's callouts for today. And then this expires, of course, tomorrow. So that's going to be my trade going into tomorrow. And like I said, I skipped a little bit this week or last week because of quad witching, and then also the amount of selling pressure that we saw on Friday. I kind of expected we'd fall a little bit further, but there was that strong reversal at the end of the day, and a PCS would have been the move. That it was just outside of what I typically put on for like my risk. So it always, it sucks when you see something that you're like, hey, I expected, 0.8% drop, but 1.3% is just a little too hefty. And we went right down to 44.50 and actually bounced off of it. So it's like, it was so difficult last week on Friday. And it's one of those few trades of the year that I actually get upset about missing, especially for being somebody who's not very emotional when I'm putting trades on. So with SPX, like I said, we use that expected move math more than anything, which you can see over here. And of course, for today, closed at 44.50 on Friday. And we've stayed within the expected move all day today. So it would have been totally fine slapping a trade on down around 4,400, which would have been nice, right? That would have been the spot to go. Here's your weekly M for the week as well. So basically priced in with a 1.3% move on the S&P this week. Totally makes sense. I mean, there's nothing too major on the economic calendar. So anytime I get a chance to go below these strikes or above these strikes, I'm all over that trade. So expected move is one of the main indicators for how I take my trades, and definitely the top one. The VIX is actually kind of low, and I'm expecting a little bit more chop. And then I feel like we're going to try to head back up to like 15 on the VIX, 15, 16, kind of similar to late August. I know it's been a month. September's usually red, and really the market hasn't done anything this month. So anytime I can chip shot away at it when the market's pretty stale is always a very fun time in the S&P, right? Like we're up 2%, pretty stale month, right? In general, went up to 4,500, didn't like it. We were down all the way to 43.70 like a month ago. But even when we flip into tomorrow, it's only going to be up like 1% on the month once tomorrow comes around, or a couple days from now. 3 to 5 red days or green days is one of my favorite things with this like 1 DTE strategy. This market likes to use like 1, 2, 3, 4, 5, 6, 7, 8, but we had a stall period in there. So you could disconnect and say, hey, that was a 3 to 4 green period. After you've risen for a few days, it's always nice to grab a call credit spread up here. And then after you've fallen for a few days, it's always nice to grab a put credit spread and wait for that rebound. So that's been a lot of what I've done lately, like I've been doing a lot of bullish plays for most of September, just put credit spreads, going with the trend, just slowly riding the sideways to up chop. Right, we're in a bull market, so really haven't had any crazy distinguishable moves one way or the other as of lately. So been a lot easier. I went over some of our SPX levels. These are gonna break, but we've stayed right in between them. Like 44.50 kind of started the move up, and then 44.65 has been its stopping point. So those have been pretty major levels as of recent. And until we can clear that, you should expect a little bit more time around 44.50. I mean, the VIX is so low, it's like 20 points for into tomorrow, and I think even on the rate hike day, it's like 35 points from here until then. Just super tiny expected moves at this moment. Position sizing, I like that 6 to 7% of your portfolio. You can do 10% with the strategy for sure. You just have to be ready when you need to trade, like manage the trade as well. Trade timing, like I like to take these trades at like 2:30. Sometimes I put them on a little bit earlier if I feel like the market's going to flip around sooner. And when I say the word feel, I mean when you see the volume actually increasing and you're sitting at a major support level and you want to get bullish, the better, like the sooner you get in with the right setup, the better. But of course, you don't want to rush anything as well. Choosing strikes always comes down to the expected move, and I always try to get 2x outside the expected move. But more importantly, picking the right side of the trade to be on. We roll with risk management, so I always try to roll before we get in the money, right? For anybody new to this strategy, which is able to, identify and help these trades out quite a bit. But if you look at like all the other trades I was taking this month, a lot of PCSs, no new trade that day. PCS, we had a CCS for a little bit, and that worked pretty well. But it all comes down to where your levels are and then how strong those levels are into identifying and helping, further yourself ahead on the trade. So I find that to be a little bit more beneficial when it comes to the markets. But setting your expectations, like I said, I just try to outperform the S&P every year. I've done it every year for the last 4 years, which has been phenomenal and awesome. Specifically, this strategy started last May and has been incredible. So, my entire goal is to continue to manage my expectations, try to stay on top of the price action, stay on top of where I think the volatility is going to move based on its levels. So, that's one really nice thing about trading the strategy, trading the markets this way, is just keeping yourself informed and improving your market awareness so you can know when to manage a trade and when you have to do something that can help save your portfolio or reduce your risk, so that you don't have the P&L of like being at a casino where you're just throwing trades on, right? Like you want to have that steady upward increase in your portfolio so you know that you found a strategy that is somewhat supportive of your mindset and your ideas, and one that you're not waking up every day filled with anxiety trying to guess where the market's going, etc. David Goggins talks about it quite a bit, where it's like that power and perseverance and understanding like what causes you to feel the way you do is one great way to identify what your weakness is. So trading, we all have strengths and weaknesses, and it's always important to really find where you're looking and find what in that area is actually causing you to make your decisions. Is it greed? Is it a great setup and that's why you're getting into the trade? Are you sizing the right amount of contracts? Because if you're not, expect your fear to pick up. And then now you have to understand, why do you feel fear? Is it the fear because you're going to lose money? Or are you fearful because you weren't as confident in that trade and you didn't listen to your setup that you normally take every single time over and over? So I just want to say that, but that's going to be everything for me in this video. Like I said, I appreciate all the support. I'll have more videos coming out. Vance is coming back on the channel. We got Halcyon coming back on. So just everybody's favorite traders all hanging out in one spot. So I'm really excited, and I really appreciate all the support as always. And I will see you guys in the next video.